So welcome everyone to today's Energy Transition Series webinar on securing long-term revenues for utility scale battery energy storage systems in Europe, or BESS as it's more widely known. I'm Caroline Clapham. I'm a corporate energy partner here at Evershed Sutherland. I'll be your moderator today. I'm shortly going to hand over to my colleague Sophie Lowe, who will run through the current trends in contracted revenues for BESS we're seeing across Europe, as well as give a short primer on the key contracting structures. Following Sophie's short presentation, we will move into a panel discussion, and I'm delighted to be joined by Carlo Corallo, CEO of Ego Energy, alongside my fellow partners here at Evershed Sutherland, Ben Brown and Martin Weitenberg. In terms of housekeeping, today's session is being recorded, and it will be shared with you by way of follow-up email, as well as being available on our website. If you have any questions throughout the session, please do submit them via the Q&A function. As we're running a short 30-minute session, we may not be able to answer all the questions live, but we will follow up with you after the session to ensure that all the questions are answered. I'm not going to pass it over to Sophie Lowe.
Thanks, Caroline. BESS continues to be seen by national system operators as critical components of the energy transition and a flexible, resilient electricity system. Key to the successful deployment of BESS projects are various contractual frameworks that ensure they are profitable and financeable. Among them, optimization agreements, revenue floor contracts, and tolling agreements play significant roles. Starting with some of the key trends we are seeing in the European BESS market. First, we are seeing an ever-increasing appetite and demand for contracted revenues such as floors and tolls as project sizes and costs significantly increase and owners and their lenders are looking for guaranteed minimum levels of revenue over a specified period, thereby reducing the financial risks and associated with variable market conditions. Second, we are seeing European markets ramping up their BESS ambitions and taking learnings from the market-leading position the UK has established. In some respects, these markets are starting off in a similar manner, for example, with reliance on government schemes, system operator contracted revenue, service revenues, or co-located projects. But in other respects, they are fast-tracking compared to the UK journey, for example, by looking at floors and tolls at a lot earlier stage in the market than compared to the UK. Third, as lenders get more involved in the BESS deployment and more sophisticated, and as debt structures mature, we see more of a project finance mindset coming through the contractual arrangements and common lender issues driving a lot more of the negotiations and structuring. Lastly, we are seeing developers of large BESS projects often being able to optimize their revenue stack to balance bankability whilst preserving their upside. For instance, by effectively splitting facilities into smaller, separately tradable parts and placing some of the capacities on tolls, some on floors, and some on fully merchant. Before we get into the panel session, we also thought it would be useful to start with an overview of what the main types of agreements are. Optimization agreements are contracts between the BESS owner and a third-party operator to essentially outsource the trading out of the asset in return of a profit share. These are sometimes referred to as a route-to-market agreement or fully merchant contract, and the third party is typically established utility with trading experience and market access. There is no guaranteed minimum revenue, but there is an inherent alignment of interest to maximize profits through the profit share. Some key protections that owners will be looking for include, for instance, ensuring the optimizer only dispatches the asset within the technical parameters which align with the manufacturer's warranties and in accordance with the relevant regulations such as REMIT, and also benchmarking the optimizer to ensure that there is a walkaway right for underperformance. Floor agreements are typically optimization contracts with the minimum revenue guarantee, although floor-only contracts are possible. Typically, the revenues will be generated and shared through each year with an annual reconciliation process at the end of the year. If revenues were below the floor level, a top-up payment would be made to the optimizer. These are coupled with the annual performance testing on aspects such as availability, round-trip efficiency, and degradation, with adjustments to the floor to reflect any underperformance of the asset, on the assumption that these will have impacted revenues. Floor contracts can be structured as a balancing floor, whereby floor payments in low revenue years can be recovered in future high revenue years. A floor-only contract is where the optimization services provided by one party, usually without the required covenant strength, and another party with the covenant strength, provides the floor aspect, like a financial derivative. Tolling agreements are where the owner of a BESS facility allows a third party, again, usually a utility or energy trader, to use the facility to trade in the market in exchange for a fixed tolling fee. There is no revenue share, so all of the economic benefit and market risk of trading the asset sits with the toller. The owner enjoys an annual fixed income for the toll period. In exchange, the owner also needs to ensure that the minimum technical requirements are satisfied, often mirroring those seen in floor agreements, such as availability, efficiency, and degradation, with adjustments to the toll fee or liquidated damages for underperformance. Floor and tolling contracts are typically longer term than merchant optimization contracts aligned with any debt. And there is, of course, a lot more focus on bankability points such as termination rights, termination liability, typical lender provisions, operational limitations such as cycle rates that could undermine warranties, and adjustments to the floor or toll levels, for instance, for technical performance, force majeure, or changes in law. These arrangements are also stacked with or interact with other revenue streams, such as contracted network and ancillary services and capacity market agreements, which can provide additional revenue streams, enhancing the economic feasibility of the project. Lastly, we'd mentioned that in addition to floors and tolls, there are also more novel products or variations of these products on the market, such as financial tolls, which are similar to contracts for difference, financial swaps, and insurance type products. Back to you, Caroline.
Thank you very much, Sophie. I'd now like to turn things over to the panel. Briefly before we start, let me introduce the four of us. So I'm Caroline Clapham. I'm a corporate M&A partner here at Eversheds Sutherland. I've been focusing on battery storage since its infancy in the UK market in early 2017. Working closely with my fellow energy regulatory partner, Ben Brown, we've gone on the journey as the UK BESS market has evolved to a mature and world-leading market, advising on more than 65% of all the utility-scale battery energy storage projects deployed in the UK to date. In the past few years, we're working more with our colleagues across the Eversheds Sutherland network, including Martin Weitenberg from our Dusseldorf office, where storage is quickly taking off in Germany. Martin's a clean energy lawyer focusing on regulatory and project aspects, including for battery energy storage systems. We're also very pleased to be joined today by Carlo Corallo, an Italian mechanical engineer and entrepreneur who is CEO of Ego Energy. Ego became a Shell Energy portfolio company in October 2023 and is one of the largest aggregators in Italy of distributed energy resources, managing third parties' assets with an aggregated virtual capacity of around 3 gigawatts and an overall volume of 4 terawatt hours per year. Given the market positioning, Ego is looking at BESS as the new frontier to enrich the portfolio, exploit short-term optionality, and enable the Ego digital platform to provide added value services to the grid. Thank you all for joining me. So perhaps we can start off the panel with a broader discussion on the main themes we're encountering in merchant versus contracted revenue for BESS in each country. Ben, can I start with you to share the history of how the UK BESS market has developed on this?
Yeah, sure. So, thanks, Carolyn. So, as you mentioned, we've been on the BESS journey for a long time here, and it started with contracted revenues. And I want to say, 7 or 8 years ago, 6 years ago, lose track a bit. But people figuring out what is optimization, what is the service being offered, what are the terms of it, and getting our heads around that market. And on that journey, we've seen a lot of I don't want to say standardization, but a lot of commonality as to what's provided for in these agreements, how people think about them, and key provisions which have become a lot stabilized. So for instance, one of the early things we were dealing with was, in the early days, you weren't getting floors. It was someone else optimizing their asset, and there was an alignment of interests, as Sophie mentioned, with the profit share, but you weren't getting any guaranteed revenue. You still wanted to make sure that if that optimizer just wasn't up to the job and wasn't providing enough revenue, you could get rid of them. So we had this went on the journey of introducing benchmarking and the termination rights for that. And in the early days, and I mentioned this in some detail because it's experience that is now being seen in new jurisdictions as they grapple with the same journey and the same sort of concepts. But in the early days of benchmarking, we didn't have Modo leaderboards or publicly available data. People were figuring out what's out there, and we had to figure out how to benchmark. And there's different ways you can go about that, looking at a leaderboard, looking at a pack of similar batteries, but in the early days, it's quite hard to come up with a pack of similar batteries to figure out whether your one's doing well or not. And we didn't see it in the UK, but we're seeing it in other markets. You can have shadow trading algorithms that put forward a best guess as to how it should have operated if you operated a certain strategy. And if you're not meeting that, then you're out, as it were. So that's one example of something that started off, worked on it, and other things as well, like the trading strategy. How between you do you decide what sort of risk appetite you both have? And it's with an optimization agreement, it's normally quite aligned because you both want to make as much money as possible. With a floor, it can become a bit more of a different dynamic because someone wants to make as much money as possible. Someone wants to make sure that the floor's not paying out. And so you start to get these sort of bits that became solid start to creak and get a bit more attention as you go along. And we're seeing that in the new markets and sort of the start of those journey and those discussions. For instance, some of the people we're talking to in Poland, the traders there aren't used to having someone ask them to be involved in their trading strategy, and they don't know what it means to show someone their trading strategy. And we've got to sort of go on that journey of, we're not actually, in the room with you getting involved in all your trades and all the secret sauce. We just want to figure out what we collectively agree is best for this asset. So we've been on that journey, and then in the UK market, we had optimization for a while, and then floors started coming into the market as revenues got choppy, or even if they weren't choppy, just to help people, or it wasn't specifically to fund, project finance. I use it lightly because the early sort of debt wasn't really that, but just the scale of the batteries and the scale of the ambition, you can unlock that and deploy a lot more capital quickly if you have a floor or a contracted revenue. You don't need to have a discussion about merchant exposure, so it sort of accelerates that. So then floors started coming through. The scale of the floors and the stakes involved have gone up significantly. Now you've got 100 megawatt transmission connected batteries. The complexity of the sites has gone up. The scale of the risk has gone up quite a lot, I'd say, in terms of, I know this is UK specific, but and it's going to be a real nerdy point, but TCLC, around making sure that there's a lot more you can do with these batteries and a lot more fines involved. And when you hand over the keys to someone else, you want to make sure that they're not going to expose you to that. And then last year, so floors have been developing, becoming more sophisticated and becoming a lot more lender focused, as Sophie mentioned. There's a lot more lender rigor coming to those now. Tolling agreements, the sort of big bang, and I was happy to be right in the epicenter of it, was Gresham's deal with Octopus last year. And that has seen an explosion of interest in tolls, whereas that used to be why would I give up all of my upside? People seem to now have a lot more appetite for tolls, particularly in continental Europe. And I'll probably pause there, but that's sort of the journey. And I'd say, as Sophie mentioned at the top end, just one of the key trends is that's been the UK journey, a lot of experience, a lot of know-how from that. But what I'm noticing in other markets is people going straight to tolls in a new market, which creates, we've got the start there, but it's a different market, and there's a different understanding of the market. There's not so many players, the benchmarking sort of point. There's nuances in each market, but they do seem to be going for the contracted revenues early.
Carlo, you're at the forefront of this in Italy. Can you share your experience looking to roll out some of these contracted revenue structures within the Italian market?
Yes, thank you, Caroline. Good afternoon, everybody. Yeah, as you were saying, yes, we are just at the frontier of this new market in Italy. As soon as you may know, Italy is affording right now the development of BESS in the Italian mix of generation. The government basically is aiming to promote BESS through two schemes. One is the so-called MAXE, which is a very interesting new mechanism that aims to provide long-term storage procurement for the Italian TSO, for Terna. And this will be gained through, let me say, a progressive increase of storage that should reach 50 gigawatt hour by end of 2030. So in 5 years, we'll be assisting to a huge increase of interest, not only in the development, but also in the management of those BESS. Basically, this is a premium scheme, a fixed premium scheme that will guarantee a 15 years duration for the asset owner. But in exchange, Terna, so the TSO, will be capable to manage 100% the volumes for the 15 years, and they will place virtual products in the market. There will be a specific market managed by the Italian exchange, power exchange, by GME, where traders could trade new products such as virtual time shift that again will be the way that Terna will remunerate their investment in those assets. So again, a very well limited possibility to have an upside from that scheme, but even a very low risk, even considering the accountability of Terna itself. There's a slight space of maneuver in terms of profit sharing, because as you know, those assets will play a key role also in the ancillary services and balancing markets, where in any case, profits will be shared 80% to Terna and 20% to the asset owner. So again, a very marginal upside for this scheme. On the other side, we have the capacity market, which was introduced in Italy 4 years ago. So we are already experiencing its benefit, even though, of course, BESS are a new technology, and we are seeing BESS being part, let me say, of this mechanism only in the last auction, the auction for the 2027 capacity market year. The capacity market allow the asset owner to have a 15 years long-term agreement with the Terna based again on a fixed price, who is the outcome of a competitive auction. We are now looking for the new auction to be held by the end of this year for the capacity market 2028. So once that you're awarded of the capacity, the BESS then should be entered COD within 2028 and will benefit of a premium fee, which in the last auction was around 47 kilo euro per megawatt per year. So again, a very stable revenue flow for a long-term horizon. On top of it, you are, let me say, to exploit all the possibility that come from the arbitrage in the spot markets. And of course, you can exploit 100% the benefits on the ancillary services and balancing market. So this second scheme is more interesting for all the developments that are based in the north of Italy, as soon as the previous scheme I described. So MAXE is considered only for south and the island, where the Italian grid system expect a strong congestion coming from the high surge of new renewable asset, new generation capacity of RES in the next 5 to 10 years. So again, we have these two main schemes, and of course, being Ego a trading entity, we are for sure much more interested in the second one, that will allow us again to exercise our commercial effort, and basically the proposals that we see in the market are basically tolling agreement. and route to market services, we don't see much as of today. The floor plus revenue of profit sharing mechanism, because of course there is not much confidence yet in this kind of scheme. So basically all the proposals we are seeing in the market are again either tolling agreement or route to market services, depending even on the appetite of risk that the asset owner wants to keep or delegate to the trader.
Thank you, Carlo. We've had a question from the audience asking the role of the asset optimizer under MAXI, and does an asset owner actually need an optimizer for the MAXI portion of the revenues?
Yes, it's mandatory to have a BRP and BSP. So again, an optimizer who has the role to dispatch the asset following the orders coming from the TSO, and again exploit any kind of additional possibility that might come from the participation of the asset into the ancillary services and the balancing market, which is again a must-have, that a requirement from Terna. So the real point here is that in any case, the asset owner should find a route to marketer or let me say trading and will then manage the asset into the spot market to respond to Terna orders, and again to exploit any kind of profitability from the secondary markets and ancillary markets.
Great, thank you so much. Martin, can I turn to you? There's some upcoming developments in the German market which are perhaps a bit choppy for BESS. Do you want to share what's been happening in Germany recently?
Yeah, thank you, Caroline. I mean, no surprise that we have similar developments here in Germany. I mean, the main business models also ancillary services, co-location with renewables, and importantly, arbitrage. Germany has understood the importance of BESS for the energy transition and is possibly on a similar journey than the UK and other countries, but faster because we started later. The choice of the marketing scheme probably depends very much on who is the developer and operator of the project. Where it is an established utility, fully merchant operation by the operator itself, possibly is maybe one or the choice of the option of choice. Whilst in other cases where the developer is less experienced, maybe financial investor background, and is not that familiar with marketing the power and the battery, then tolling agreements are, at least to my perception, the option of choice, yeah, at least where the operator does not have a specific interest in upskilling and is seeking project finance. Yeah. But expect that once BESS has become even more mature in Germany, there will be appetite also for less conservative risk profiles. So we will probably learn from the UK, might be where you were in 2018, and it will be exciting to see what will come next.
Thanks, Martin. Do you want to share about the upcoming federal court ruling that will potentially affect BESS projects in Germany?
Exactly, thank you for that. I mean, we're talking about the revenue stream of BESS projects here in the first place, but if we speak about revenues, we also need to consider the cost side, which is part of the model as well. And there are a few exciting developments or important developments which the industry is really looking to follow up. So grid connection is like, I would guess everywhere, the connection assets as such are 100% cost borne by the developer. But in addition to that, expansion measures by the grid operator, which need to be taken, are at least by usual grid connectees be partly borne or subsidized, so to say, through building cost contribution, referred to as BKZ, Baukostenzuschüsse, for all of those who have already heard of it. And this has been challenged by BESS developers who said that their assets are grid friendly, so to say, support the grid, and that's why they should pay less. They brought that before the higher regional court here in Düsseldorf, and they prevailed in the case against the opinion of the regulator, who thinks that BESS should not be privileged that way in this scenario. And the regulator therefore brought the case before the Federal Court of Justice, which will have its oral hearing next week. And that is something which will have a significant impact on BESS projects in the future. Besides another aspect, which I'd also like to mention, which does not relate to grid connection, but grid access. Currently, we've got privileged rules for BESS projects which are commissioned until August 2029. They will not have to pay grid usage fees for drawing the power from the grid for a 20-year period, which is considered as crucial for the market ramp up. Question is what happens after 2029? And from a discussion paper from the regulator issued just recently, one can understand that the regulator also here does not want to maintain 100% privilege for BESS operators. So might happen that they will have to pay the same grid usage fees as, for example, data center operators. Just one aspect which might create optimism for the industry is that the regulator says that where BESS cause lower cost, then that might also be reflected in the grid fees to be paid. So that is also something to be followed up and important for the business case of marketing BESS.
Thank you, Martin. Carlo, I know in Italy you've been looking to UK deals as precedents and then trying to take those legal agreements and structure them to work in the Italian market. When we chatted, you mentioned some of the aspects that need quite a bit of tailoring are around the actual operational side of things, IT, those aspects of it. Can you speak a little bit about what you've been working on to try to make a UK contract work in an Italian market for tolling or examples?
Apart from legal topics, I'm not an expert about, of course. I can just let you describe what is happening in some of the negotiations we're looking at right now. Of course, there's a very country-specific requirement coming from the technical specs imposed by TSO, because you have to consider that those assets are crucial and may become even more crucial in the next future. So a specific technical team is required to operate those assets even though remotely. So that means that it's not only mandatory, like I say, to have a BRP and BSP for a contractual reason, but it's mandatory because, again, TSO can call you any time to have a very, very rapid response to their order, to their request. And so you basically need to have a very reliable IT infrastructure and a very reliable platform to dialogue real time with the TSO and the asset owner at the same time. And this is, again, very country specific. So what we're assisting is that we cannot scale up, let me say, with a common 24/7 trading desk providing services throughout all Europe, but we have to maintain a stable organization country by country in order to fulfill the local technical requirement.
Thanks, Carlo. Ben, I think that's been your experience because you've been rolling out UK precedents to places like the Netherlands, Nordics, Poland, other European jurisdictions. Ben, did you want to speak about or just touch on some of the aspects that you've found that you've had to tailor for country specifics?
Yeah. I mean, given the time left, I suppose I'll try and make a macro observation about these contracts that's maybe useful for the audience. Some people, there's a lot of sophistication in battery developers and battery lenders and battery traders now. But some people are relatively new to the journey, and a lot of people come from a renewables background as well, and they are familiar with PPAs. And there's a lot of bankable PPAs. We all know what one of those looks like in that market. There's a lot of similarities in this market, but it is fundamentally a very different product. And one of the things that's cool and challenging about batteries is they're very finicky. So with these contracts, you need whereas I think of a PPA as a lot more transactional. You set up your side, you sell some power, they buy it. With a battery is a lot more of a partnership, and you're a lot more intertwined with each other, and a lot more you need to, a solar plant and wind plant, how they run is relatively straightforward compared to a battery. You need to have a really good understanding of the technical things that are going on, what the requirements are for COD, who's doing what, because you're so much more interwoven with each other. It's not quite so apart. So, you know, the optimizer failing to install their kit and get themselves set up to actually be able to dispatch it could cause you COD delays, which if you've got a flaw riding on that termination right, that's a big issue. So, and sometimes these things haven't been thought about because people come or not fully addressed in the contract. And so it's really important to understand all that. And the markets they trade in are so much more complicated. And, you know, that feeds into all sorts of stuff around who's doing what, who's responsible if we can't play in this market, or what the penalties are, what happens if the markets change, what if there's a more fundamental change, like in the UK, what we're looking at with REMA is, I mean, that's got a huge implications for PPAs, but, you know, batteries, they play around in so many markets, which is one of their strengths, but there's a lot of moving parts that can move, and their revenues are a lot more complicated and sensitive to certain changes than perhaps, you know, a conventional project. So that's one of the things I've seen. And then all you see is that play out when you take UK concepts to a market. They've got unique rules around grid. They've got strange things that pop up around who has to hold the grid and how you arrange market access for this and that. And the only other comment I make is that with going to tolling, one of the things you kind of miss out on as an asset owner is the visibility on how and the lessons as to how people are doing that, what trading they're doing, because you kind of just build your asset, hand over the keys, and then away they go. Whereas if you've got a flaw or an optimization agreement, you can see a bit more of that and learn a bit more.
Yeah. Definitely more than can fill half an hour to discuss on this topic. But I really want to thank our panelists here today. Please do follow Evershed Sutherland Energy on LinkedIn if you don't already. It tells us about our future updates, including events like this energy transition series. And as mentioned at the start, the session's been recorded, and a recording will be sent to you as soon as possible. And please do reach out to us if you'd like to chat to us about any of the aspects discussed here today. Thank you very much.